The sirens are already wailing across Moscow's financial district, but most people don't even know it yet. Right now, as you watch this video, Russia's second-largest bank is collapsing in real time, and the shockwaves are about to hit America harder than anyone imagined. If you want to stay ahead of what could be the biggest financial crisis since 2008, make sure to subscribe and hit that notification bell, because what I'm about to reveal will change how you see the global economy forever. The marble floors of VTB Bank's headquarters in Moscow echo with the hurried footsteps of executives who know their world is crumbling. Behind the polished facade and confident public statements lies a terrifying reality that even seasoned financial experts are struggling to comprehend. VTB's net interest income slumped 49% to 146.8 billion rubles in just 6 months, a collapse so dramatic that it defies every prediction made by Russia's top economists. But this isn't just about numbers on a spreadsheet. This is about the systematic destruction of an institution that millions of Russians trusted with their life savings. The bank's lending operations, once the lifeblood of Russia's economy, have withered like flowers in a nuclear winter. Russia's second-largest lender, VTB, is grappling with deepening financial strain amid a surge in loan defaults, including on credits issued to finance military production, creating a vicious cycle where the very war meant to strengthen Russia is instead devouring its financial foundation from within. Walk through any VTB branch today and you'll see something that would have been unthinkable just 2 years ago. Empty counters, nervous tellers, and customers quietly withdrawing their deposits while pretending everything is normal. The atmosphere is thick with unspoken fear, the kind that spreads through financial institutions like wildfire when confidence begins to crack. What makes this collapse even more chilling is how it was hidden from public view. While VTB's executives were painting rosy pictures for state media, internal documents were revealing a catastrophic deterioration in the bank's core business. Military production loans, once considered the safest bets in Putin's economy, started defaulting at alarming rates as factories struggled to meet impossible quotas while dealing with supply chain disruptions and international sanctions. The human cost of this financial earthquake is already becoming visible in Russian cities. Small business owners who relied on VTB financing are shutting down operations overnight. Families who kept their mortgages with the bank are receiving letters that read like death sentences, informing them of interest rate changes that will make their homes unaffordable. Construction projects across Russia have ground to a halt as VTB's real estate financing division effectively ceased operations. Behind closed doors in the Kremlin, emergency meetings are being held at all hours of the day and night. Putin's economic advisors are presenting scenarios that would have been dismissed as Western propaganda just months ago. The collapse of VTB isn't just a banking crisis. It's a national security emergency that threatens to unravel decades of economic planning and social stability. But VTB's fall is just the beginning of a much larger catastrophe that's about to engulf the entire Russian banking system. At least 3 of Russia's largest banks are poised to ask the central bank for a bailout as bad loans surge and balance sheets buckle under growing stress, creating a domino effect that financial experts are comparing to the early days of the Great Depression. The banking halls that once buzzed with the energy of a growing economy now feel like mausoleums. Sberbank, Russia's largest financial institution, is watching its own lending portfolio deteriorate as panic spreads through the system. Signs of credit stress are beginning to emerge at the country's 2 largest lenders, Sberbank and VTB, suggesting that even the institutions considered too big to fail are showing cracks in their foundations. What's particularly terrifying is how quickly this crisis is accelerating. Officially, overdue loans reached 10.5% for households and 4% for businesses in Q1 2025. But insiders say the true picture is far worse. Banking executives, speaking on condition of anonymity, describe a situation where the real default rates are being systematically underreported to prevent mass panic. The psychological impact of this financial meltdown is creating its own destructive momentum. Several of Russia's largest banks are reporting an outflow of individual deposits following reductions in interest rates and widespread rumors concerning potential deposit freezes by the government. Russian citizens, remembering the painful lessons of the 1998 financial crisis, are quietly moving their money out of the banking system entirely, creating a liquidity crisis that threatens to turn a banking problem into a full-scale economic collapse. In the trading floors of major Russian banks, screens that once glowed green with profitable transactions now flash red warnings as computer algorithms struggle to process the magnitude of the crisis. Currency traders watch helplessly as the ruble continues its death spiral, while bond traders see government securities lose value faster than they can be sold. The ripple effects are spreading beyond Moscow's financial district into every corner of Russian society. Regional banks that relied on interbank lending from VTB and other major institutions are finding themselves cut off from the capital they need to operate. Small cities that depended on these regional banks for basic financial services are essentially being cut off from the modern economy, creating pockets of economic isolation that haven't been seen since the Soviet collapse. What makes this crisis particularly dangerous is its timing. Russia's economy faces a worsening outlook that is graver than publicly acknowledged, with a credible risk of a systemic banking crisis in the next 12 months. The convergence of war expenses, international sanctions, and internal economic mismanagement has created a perfect storm that no amount of government intervention seems capable of stopping. But the really shocking part of this story isn't what's happening in Russia, it's what's about to happen to America and the rest of the world. Financial markets that seemed insulated from Russia's problems are discovering that in our interconnected global economy, no crisis remains contained for long. The tremors from Russia's banking collapse are already being felt in unexpected places across America. Commodity markets, which seemed stable just weeks ago, are experiencing violent swings as traders realize that Russia's financial chaos will disrupt supply chains for everything from wheat to rare earth metals. American farmers who export grain to Russia are seeing contracts canceled overnight, while manufacturing companies that rely on Russian raw materials are scrambling to find alternative suppliers at premium prices. Wall Street's most sophisticated algorithms are struggling to price risk in a world where one of the largest economies is experiencing financial system failure. The likelihood of a U.S. recession has climbed to 40%, up from 25% in its previous outlook, as analysts begin to factor in the global implications of Russia's banking crisis. What started as a regional problem is now threatening to trigger a worldwide economic downturn that could rival the 2008 financial crisis in its scope and severity. American pension funds and investment portfolios that seemed safely diversified are discovering hidden exposure to Russian financial instruments through complex derivatives and international bond funds. Retirement accounts belonging to millions of Americans are losing value as fund managers struggle to unwind positions in a market that's essentially frozen with panic. The energy sector, already volatile due to geopolitical tensions, is experiencing seismic shifts as Russia's financial institutions lose the ability to finance oil and gas exports. American energy companies are seeing unprecedented opportunities as Russian competitors effectively exit international markets, but they're also facing supply chain disruptions that are driving up operational costs across the industry. In America's financial centers, emergency meetings are being held at the Federal Reserve and Treasury Department as officials try to assess the full scope of potential contagion effects. The complexity of modern financial instruments means that American banks could be exposed to Russian banking losses through channels that weren't obvious until the crisis began to unfold. American consumers are already feeling the impact through rising prices for goods that depend on Russian supply chains. Electronics manufacturers are warning of shortages for components that rely on Russian rare earth metals, while food processors are dealing with disruptions to grain and fertilizer supplies that are expected to drive up grocery prices significantly over the coming months. The psychological impact on American markets is creating its own destructive momentum. Investor confidence, already shaken by various economic uncertainties, is taking another major blow as the Russian banking crisis demonstrates how quickly modern financial systems can collapse. American stock markets are experiencing increased volatility as algorithmic trading systems struggle to process the rapidly changing risk environment. Perhaps most concerning for American policymakers is how this crisis is exposing vulnerabilities in the global financial system that were previously hidden. International payment systems that facilitate trillions of dollars in daily transactions are showing strain as Russian financial institutions are effectively cut off from global networks, creating bottlenecks and delays that are affecting commerce worldwide. The crisis is also accelerating trends toward financial deglobalization that could fundamentally reshape how international commerce operates. American companies that built business models around global supply chains and international financial integration are being forced to rapidly restructure their operations for a more fragmented world economy. What we're witnessing isn't just the collapse of some distant banks in Russia. We're seeing the beginning of a fundamental transformation of the global financial order. The comfortable assumptions that guided economic policy for decades are being shattered by the reality that financial systems built on interconnected trust can unravel with shocking speed when that trust is broken. The perfect storm that's destroying Russia's financial system represents the convergence of multiple catastrophic forces that are now reshaping the global economy. Russia's economy faces a worsening outlook that is graver than publicly acknowledged, with a credible risk of a systemic banking crisis in the next 12 months. But what makes this crisis truly unprecedented is how war expenses, international sanctions, and internal economic pressures have combined to create a financial apocalypse that threatens to remake the world order. The numbers alone tell a story of systematic destruction that defies historical precedent. As of January 1, 2025, Russian banks held assets worth 199 trillion rubles, 2.3 trillion. The majority, 120 trillion rubles, was tied up in loans, creating a massive vulnerability when those loans began defaulting at rates that exceeded even the most pessimistic projections. This isn't just a banking crisis. It's the methodical dismantling of an entire economic system that took decades to build. The war economy that was supposed to strengthen Russia has instead become a cancer eating away at its financial foundations. Military production facilities, showered with cheap credit from banks like VTB, have become black holes for capital that generate weapons instead of economic value. The irony is devastating. The very conflict meant to demonstrate Russia's strength is proving to be the mechanism of its economic destruction. International sanctions, initially dismissed by Russian officials as manageable inconveniences, have proven to be financial weapons of unprecedented effectiveness. Cut off from global financial networks, Russian banks have been forced to operate in isolation, like islands in an economic archipelago that's rapidly sinking beneath the waves. The sanctions haven't just limited Russia's access to international markets. They've created internal distortions that are tearing the domestic economy apart from within.